Good morning, traders. Paul here with GammaEdge. Today is Tuesday, the 14th of March. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Overall, the summary for today is kind of mixed to down. On the short-term timers, we have two of them. The cumulative tick closed nearly on par with Friday's close. So mathematically, it's flat. I wouldn't read too much into this, and as we constantly say, don't torture the data to tell you the story you want to hear. Very important. Our other timer, which is a railroad track down, you'll see that here shortly, is in its fifth consecutive day. It's flattening out. We could be in a reversal pattern. Just we'll have to wait and see how today progresses. The nice thing about the CT is that it's instantaneous, and so as a result of that, you'll get some pretty quick confirmation about what's happening within the overall market. Long term, the ribbon is inverted. It's on the bearish side, and we had a number of changes that I explained yesterday in the morning call. So we're looking at the NASDAQ as being last fall, first to rise here, but just be aware, everything is down. Market breadth, as viewed by our 52-week new high, new low breadth indicator, had another day where the 52-week new lows really outpaced the new highs. And again, it is the worst day for the bulls. Friday was the worst day, and yesterday was even more worse. Transitions, which are the areas where call and put gamma begin to flip within the overall models, are moving up, and spot prices below us. When we have that condition, that's actually a bearish condition, as it is indicative of calls being closed on their short-dated positions and kind of throwing the towel in. So just be aware of that. We need to see a reversal of that, and we're not seeing that right now. Again, this is driving with the rearview mirror. It's not predictive, but it does take time, so momentum in one direction typically will remain unless we get some really quick moves in the overall market one way or the other. And CPI obviously will influence that here today. For the 0 DTE folks, pay attention to playing long off the 38.50 and short off the 38.90 level. We see these as real critical levels. A drop below 38.50 with a hold, so if we test it from below and it holds, you can probably play that short as it opens the door to 3,800 and even points lower, 3,775. And this is because a large amount of the puts shift to in the money status, and that'll flip the flows negative. A move above 38.90 could be paused. And what we mean by that is that we would wait until we got above 3,900. The close proximity to that Livermore level at 3,900 is a big deal. And we want to see what transpires. A hold of 3,900 from above, so we break through, we come back, we test it, could trigger a push higher, as most of the puts in the structure will flip to an out-of-the-money status. It'll flip their charm flows, and as they decay, that will be constructive to the deltas that are in the overall structure for the 0 DTE folks. Here's the market model. Again, flat on the day yesterday, so back and forth, back and forth, back and forth. So the railroad track pattern, as you can see, is starting to flatten out, and we can break either direction, right? We could continue lower, especially with the CPI print. We could rebound here, especially if the CPI comes in as expected and if more of the bank information becomes clear. Either way, this is probably your opportunity to take some of those gains in those short positions off the table. You can leave some runners, but we would be looking to watch this and look for a rally within an overall declining market. So just be aware of that. Taking a look at the gamma levels, we've got kind of this mixed thing going on. So above spot price, we're actually seeing puts being closed. These are in the money puts that are being closed. That's actually moving the deltas higher. That's interesting. And that's happening both on the SPX PM complex here on the left as well as the combo complex here on the right. Below spot price, we're actually seeing puts go in and the deltas get more negative. So just be aware of that too, and that could be calls being closed, puts being open below us, and so we've got this real dichotomy going on. The expected move, this is a conservative open high-low close expected move that we calculate for our premium sellers within the Discord. Pretty fat range. It's going to be hard to get any premium up and below this, but with the elevated VIX and today being the last day before the VIX monthlies roll off tomorrow morning. We might get some fireworks, and that you might be able to capture some gains. So this would be the conservative levels that we'd be targeting above and below if we were going to sell any premium. Taking a look at Charm Flows, virtually no contributions anticipated today from the call side of the equation. From the put side of the equation, you can see this 38.90 is this major spike down right now because this is in the money. This has a lot of influence right now. 3,900 sitting here, and then you can see some other minor nodes which will grow as price goes upward. The 38.50 will be constructive, and if we do push upward above this 3,900 strike, you can see a lot of this is going to get pushed into a positive flow. So just be aware of that, and you can play that accordingly. Looking at the PM settled complex, as far as the eye can see here, we've got complete domination from in the money and the out of the money puts. So these are the deltas, and you can see the out of the money deltas from the puts are dominating the conversation below us, and the in the money puts are dominating the conversation above us. Enough said there. You know who's in control in the short term. The SPX PM transition is fat, it's loose, it's moved up a little bit, which is not good for the bulls. Basically, it's indicative of the towel being thrown in. So we're still quite bearish on the market, still very net put dominated across the market. So just be aware of that. Taking a look at the 0 DTE, a couple hiding places are potential areas that we're watching here. We note that we parked at 38.55. We missed this by about 10 points yesterday. This is what we call a delta gamma node, and it's where a transition occurs. We see this all the time, and so basically if we can identify these could be a good structure for a lotto ticket. 1 DTE, what's positive here and why we put this in green, as puts are vaporized, that money has to go somewhere, and so tomorrow is still showing a net negative expiry, not overly strong but strong enough. We'd like to see puts come out of the complex, and this gives an opportunity if there is that cumulative tick, if we are actually going to bounce here. This will be constructive to that because as the out of the money puts expire, that'll give us positive charm flows, and that could push us upward. You can see this 39.10 for tomorrow is really the line in the sand, so this is actually an achievable goal. So if we can get up into above 3,900 and start pushing towards the 39.10, 39.15 zone, very, very constructive for a setup tomorrow and into the rest of the week. Taking a look at the combo complex, because this is the week of expiry of the AM and the PM settled, we combine both here. We're looking just at the expiries. Couple key things. First of all, this didn't change much. So even though we've taken Monday off the table yesterday, the numbers are roughly the same. And what that means for all intents and purposes is that we had a lot of puts being added yesterday. So it didn't really shift the balance of anything. A couple key things to be aware of. Transition has moved up. And when transition is moving up, that's indicative of out of the money calls being closed. And that's not a good thing. And so basically it allows the in the money puts to drive the conversation, and they are driving the conversation. They're pushing transition further away from us, which is not a good thing. Think of a rubber band. We're getting pretty well extended from where this thing is, and we're deep in this. So it's going to be very interesting to see how this resolves. Typically it resolves one of two ways. Either spot price moves towards transition or transition falls. And then that'll be a change in the market nature. Just want to highlight above spot price, we have out of the money calls, and there's no sign of them. They're really nothing's happening there one way or the other. And as a result of that, we are a little reserved in our bullish stance. Of course, we can rip north here with any news event, and certainly can play that with what we're seeing here. 3,900 for the week is a key level, so if we do break above that, that'll be an important play. And then of course 3,950, you can see we start the transition for the week, so that's something to look at there. Finally, your eye probably caught this green box here. These are actually in the money calls, and these in the money calls for the week are starting to be persistent. This is good. This means that out of the money puts are being closed and are not pounding this area for this week. And that can be constructive to actually turning the corner and starting another process, another leg north. So I just want everyone to be aware of that. And then finally here, looking at the SPX combo, this is the AM and the PMs all combined into one, all the expiries turned on. So 33% expiring on Friday of the entire complex in net gamma. Again, we're seeing the transition moved up, which is not good. I just explained that. We are seeing, though, that net number of calls. Now, we don't normally watch the put-call ratios or anything up here, but when we see calls going in, but nothing happening in the middle here, and it's not, we're actually seeing calls come out here in the middle, which is not good for the call speculators. It's interesting. So we've got folks targeting the Livermore level of the 4,000 strike and not much else in the middle, and that's allowing transition to go up. So again, we need spot price to push north, or we need the transition to come south. Either way, one of these things that's going to happen is going to be indicative of calls being opened. So we're extreme bearishness right now, probably too bearish. And it's probably time to start sharpening your pencils and thinking about what can you do on the long side. 3,900 is very obvious. 3,800 to the downside. You can see the other quarter and half levels on the way down, quarter and half levels on the way up, all the way up to 3,950. Finally, taking a look here at the combo structure. Transition's a little bit fatter. As I said, it's moved up, not down. So you've got some key strikes that we've got to get above to have any chance. We'll note that even though calls have been targeting the 4,000 strike, this is why we watch GEX ratio and not PCR or put call ratio, we're actually seeing a net reduction here. So we're seeing some of those 4,000 calls actually go out in time. They're not for this week. So this is not indicative that everyone's targeting for this week. The 4,000 strike would be nice, but they are pushing out, and that's reducing the gamma here. We're almost at the same spot we were at yesterday in spot price. So we've got a fairly net negative reduction here, which is indicative with those calls going in at the 4,000 strike, pushing out in time, and that's manifested here. Also note here, 3,800, significant reduction from where we were yesterday also. So we're actually seeing a redistribution. Of course we would. This is quad witching. This is the roll week for the ES. This is also where a lot of the AM settled complex for the SPX gets pushed out into the April and beyond. So that's it for today. If you have any questions, comments, want to come in, kick the tires, go to GammaEdge.us. Upper right-hand corner, there's a pricing tab. Click on that tab, select your plan that you would like to come in. 14-day free trial, all the tools turned on. Great group of traders, a lot of learning going on. Everyone's very, very supportive. It's a great environment to learn. Follow us on Twitter, GammaEdges with an S, and here on YouTube. Two things. If you like today's content, let me know immediately by smashing that like button. That gives me immediate feedback that I'm providing something that's actionable for you. And then, of course, subscribe, because Taylor, myself, and Michael, when he's not on vacation, post videos of what we're seeing and how to use this stuff, and it will notify you that something new is there and for you to watch. So with that, I will bid you farewell. Make it a great Tuesday. Be careful with the CPI. Hope to see you in the Discord. Thanks, everyone.